Yeah, as you mentioned earlier, stock's up over 50% since the IPO. It came at a very reasonable valuation. We're fundamentally very bullish about Chewy's prospects. But I think there are a couple things we're concerned about. One is the move in the stock. Two, when you do a price compare against Amazon, the prices are literally right on top. Third, having worked in technology for 20 years and taken over 50 companies public, there's really little competitive differentiation around the technology. They largely resell other people's products, and effectively the competitive mode is low. So Target, Walmart, the rest of the industry wants to be in this business as well. Chewy definitely has incredible customer service, and effectively this auto ship capability, you know your dog's going to eat, your cat's going to eat, and so this auto ship gives you great visibility. But again, in terms of the price differential, the proprietary analysis we do on pricing suggests that other retailers are right on top of their pricing.
Sure. But if as long as the other retailers aren't undercutting the prices by anything of magnitude, you just described a pretty reliable subscription-based business, no?
That's right. And that's why, again, we're not sell rated, we're not buy rated, we're right in the middle, because there's elements of the business model that we really like, but we also note that the stock is up. And again, from a competitive perspective, we've just seen a lot of other models that have been disruptive that had much higher moats than they have. The moat here is not quite as big as I think most think.
In your note, Brent, which you titled "Keep This One in the Kennel," so one of those puns was, in fact, yours. Nicely done. You note that just 14% of U.S. pet food and supply spending is done online, which is staggering to me. That tells me that an Amazon, which has the auto ship sort of feature when you run out of something at the end of the month, it automatically ships to you, that an Amazon can easily step in, a Walmart can easily step in and snatch that business away from Chewy. I don't really understand what moat, if any, Chewy really does have.
Melissa, it's a good point. Even on Amazon, if you add more than 5 items to your basket, you even get a larger discount on the recurring revenue model. So I think, Amazon cares. Obviously, Chewy's CEO came out of Amazon. I think it was strategically a smart decision by the board to bring on an ex-Amazon executive who knows the playbook. Again, this market's big. There's plenty of runway for multiple vendors in this market. And I think, again, this consumerization of pets is happening. But again, I agree. I do think there's a moat. When you look at the Net Promoter Scores, you look at the customers that I speak to, my friends that use this product love it. And they have no reason to switch. They're also doing things to differentiate the model. They're getting into pharmacy. We think over time they could create digital marketplaces. You think about as much money as you spend for your bird food, how much time and money does it take to actually watch the bird, the cat, or the dog when you're on vacation? It's a lot more expensive than the food. So there's other things you can do around pet care, around long-term care. There's other digital pieces to this model they can introduce that would effectively be higher margin that aren't in the model today. They could also shift to more of their own product sales versus selling others that are at a lower margin. So they're definitely levers. So it's hard to get really negative, but it's also hard for us to be really positive given the magnitude of the move since the IPO.